So guys, now let me show you how this stuff works, how this strategy works. You go to your daily candle time frame, and you spot the previous day candle. This is the previous day candle, this one here. So, okay, I've already set it because I used it today. This is what you do. You bring in your what's it called? Your trend lines. Sorry, you bring in your trend lines. Let's say your trend lines, you don't even have a trend line before. Let me remove these ones. Sorry, let me just remove these ones in case you are new to forex and you don't know about trend line. You just tap anywhere, you go here, you choose your trend line, you trace where the previous day candle had its highest week, where the week stopped. uh you place it there. This is the highest point it's reached for yesterday, candle. Then you add another one. Well, the idea behind this is just price actions. We are making use of price actions, market price actions, to catch spikes. It is advisable to catch spikes in boom and crash than trading against the spikes, because it will be deadly when you trade when they go against you. So this is where this is where the candle closed. You go to where the candle closed for the previous day. You put your trend line there. You put this one here. Then you get another one. You put it at where it opened. This is the opening for the last previous day candle. Then the lowest week. You put it here. Then you go down to 15 minutes or 5 minutes, preferably 5 minutes. That's what I use most of the times. So if you come down to this 15 minutes, you see that the market has been responding to this trend, to this point here, to this resistance here, and that was the highest point the market reached yesterday. So once the market moved and reached there, it dropped. It moved again, reached there, dropped, reached here, moved again, reached again, dropped. So if you're now making an entry, this is where you target. I actually caught I caught this entry here. I placed a trade here in the morning when I saw it, and it crashed back down to this place before I took my profit. You can imagine the massive profits. So the strategy now is, if the market should be around, let me say you saw this market around here going up, making all those small steps, and you saw it here, you come and wait for it here. You can place a sell stop here, or you can buy anywhere around here and then be adding positions. But it's preferably you place a sell stop around here, around the trend line, because definitely the market will react to that trend line when it reaches there, because that's the previous day. It had there was an action it had the previous day, so it will always respond to that action it had there. That's the uh that's the price action we are talking about. So once it reaches this trend line, there's a high tendency that it will crash. So, and if assuming it crashed down to this place, or you want to place a buy, you still place your buy around the trend line, because once it's crashed back to, this market, sorry, let's say this market moved down to this place and you saw it here, just wait a little for confirmation. There's a tendency that at this support, that there's a tendency that it will go up. So if you want to place your buy should be around above the trend, so that it will buy up a little and then you close, because for boom and crash you don't in fact, it's advisable not to trade against the spike. But if you should do that at all, you place your entry above the trend line. So assuming you catch it below the trend line, you still wait. Oh, I don't know where this thing, I've touched it and I don't know. Okay, I will just have to go back to daily daily candle time frame and rectify that, but let me just leave it here. So if you should cut like now, this this but it have had a lot of reactions at this trend line, so placing it here might be a little bit risky because it might break out and keep buying. But even at that, it is so much advisable if you want to place this trade now, so much advisable you place it somewhere around here, because definitely once it reaches, and you can see once it reaches this trend line, it will crash. Even if it doesn't crash immediately reaching this trend line, once it passes it a little, just within this region, it will crash back and you will be in profit. It is preferably to trade this strategy in 5 minutes time frame so that you see what is happening. Once it reaches this this trend line, there are tendencies that it will crash back. It's reached here, passed a little, crashed, then passed again, crashed, passed, crashed, and then you can see it here. It's moved up a little, it crashed back to this trend line, then it moved again. That's how it has been crashing. So if you are to enter this trade, you just take your trade somewhere around here. There's high tendency that it will crash from around here. There's high tendency that it will crash, responding to this action here from the yesterday candle. So other things to check out when you want to enter trade, assuming you see this thing here, for you to confirm whether you will enter, just maybe go to 1 minute time frame and see what is happening in 1 minute. You see what is happening here. So you check your RSI. It's always advisable to trade this strategy with this RSI period 14. Set your period to 14. While setting your RSI, you set it to 14. So whenever it enters overbought, whenever it's overbought, which is around this side, this overbought here is reflecting to somewhere here, so it will crash. Whenever it enters overbought, it will crash. Now, you know, overbought, when market enters overbought, this thing will be showing from 70, yeah, from 70 to enter overbought here, which is this. And as you can see, it's what is reading here is 50 something, which means it's still around here. So once it enters overbought, you'll be seeing 70 something. But most times you will see a very long step. I don't think I can see those kind of steps in crash and boom. You see a very long step. Let me just take this for example. This kind of step, if you should watch where this thing, the kind of movement this thing made here, this overbought region was around 90 something. So anytime you come to place a trade, before you place a trade, just most times allow the RSI here, allow the RSI to reach 90 something before you start placing trade. At least for me, I allow it once I see the RSI around 95 and it is close to this thing, and the market is close to the trend line, and the RSI is reading 95 or 90, sometimes 97. That means it's a very good time to enter because it's already in overbought region. It has really bought for so long, and there's a greater chance for it to react to this trend line, which means it is overbought, number one, and then it will always respond to the trend line. So it has high tendencies of crashing. So those are this is the major strategy. Most people that even know this strategy won't tell you this. The major strategy is this: when it is overbought, and then when it is close to the trend line, you sell and hit your profits immediately. So that's how this strategy works. I hope this was clear enough. It wasn't. If it's not clear enough, you can DM me, you can send me a message for clarification. Thank you. And for other guidance and coaching, thank you very much. All right, guys, if you could remember on the last video I did, before I post the video, this this market was actually around somewhere here. The steps were actually around somewhere here, but as you can see, just like I told you, it respects this trend line here because of the price action. Once it's reached to this place, assuming we entered that trade here, we placed a sell stop here, we would have been in profit. Once you enter the trade here and it reaches this trend line, it will always respect it, or it gets close to it, it will respect it and it will crash to profit. And if we had placed it anywhere around here when I was doing the previous video, we would have been in massive profit. And this would be enough. Assuming most times, if you have a good account, a bigger account, always go with like 0.5 lot size, or if your account can carry 1.5 and you still, I mean, sorry, 1.0, and you can still add and you can still add positions with the 1.0, it will be very fine to go with 1.0. But if you have a very small account, please don't go for 1.0, go for small lot size that you can add positions in case it starts. Like, if you, assuming you place the position here, you place a sell here, and it starts going, maybe reaching to this point. At this point, you are supposed to have added positions, so that if it should crash maybe from here to here, you're already in massive profit. And even if it crashes from here to, let's say, here, and didn't touch your first position, you will still be in profit. The last one will cover up for the other one, and if you wish, you can close. If and sometimes and if you wish, you can still leave it to keep crashing into the first position you open. So most times your first position will just be smaller, then the second one, third one will be bigger, so that when it crashes, when the step keep going, and then it crashes into your profit, and then it crashes to your position, you'll be in massive profits. I don't know if you understood what I said. I just mean that if we have entered here when we saw it, and then it kept going around here, we're supposed to enter again, so that when it will crash into massive profit. And assuming it kept going, and let's say it reached around here, and our first position was here, and second one here, and then and it kept going to up to this point. At this point, we're supposed to have added one more position at least, so that when it crashes, we'll be in profit. I don't know if you get that.